If you're a veteran and you're thinking about buying a home, in this video, I'm going to cover 4 things that you need to know about VA loans.
Son, your ego is writing checks your body can't cash.
What did I say? Hi, my name's Jose. I'm a realtor with RE/MAX here in the Inland Empire in Southern California. And if this is your first time to the channel, well, first of all, welcome. Really happy to have you here. In fact, be sure to hit the subscribe button right down over here. And also, don't forget to hit the bell. This way you're notified of all upcoming videos where I talk about buying, selling, and of course, living here in the Inland Empire. As a veteran myself, this is something I really enjoy doing, which is getting the opportunity to help my fellow veterans. But let me do this though. Let me first start out by clarifying the VA home loan, because it's not a loan. Many people do have this misunderstanding. It's not a loan that the VA is giving you. In other words, you don't go down to the local VA office and fill out a loan application. No, instead what happens is you are still going to go to either a bank or a mortgage company to get your loan, but what happens is the VA is guaranteeing part of the loan to that lender, whether it's the bank or the mortgage company, but it's guaranteeing a part of that loan to that lender against any potential losses, which is what allows them to give you the wonderful terms that we all look forward to with our VA home loan. So with that said though, here are the 4 things that I was talking about at the beginning. There's 2 things that are going to allow you to be eligible for a VA home loan. And first, the obvious. You got to be a veteran. Yeah, so if you're a veteran with at least 24 months of military service and good separation status, meaning it's not a dishonorable discharge, then yeah, you're halfway there. Although, if you do have less than 24 months of service because maybe it's a medical discharge or maybe some sort of a hardship or just something along those lines, you may still be eligible. For more information on eligibility, I have a link for the VA's website in the description section below for you. Now, just because you do meet the service requirements doesn't mean it's an automatic. You do still have to meet the credit and income requirements for the loan too. Remember, you are getting your loan from either a bank or a mortgage company, so you are still going to need to qualify for the loan. Now, when it comes to credit scores, that one can vary a little, not a lot, but it can vary a little. But I'll put it this way, on average, if you have at least a 600 FICO score, you should be in pretty good shape. And of course, you can't have too much debts either. However, you should be in good shape if you have at least a 50% debt to income ratio, meaning this, 50% of your monthly income going toward your debts like credit card payments, student loans, car payments, and the new house payment. That would be part of it. But if you have no more than 50% of your monthly income going toward those, then again, you should be in pretty good shape. But of course, though, these are not flat across the board. Some lenders can vary a little from one to the next. Yeah, just like with any other type of loan, there are loan limits for VA loans, such as this. If you look at non-VA loans, you have conventional loans, FHA loans, and so on. But within that, they're broken down to either conforming loans or non-conforming loans. And I already know what you're thinking. What the heck does that mean? Without turning this into lender college, simply put, conforming loans are basically just loans that meet the certain terms and criteria that's set by Fannie Mae and Freddie Mac. Conforming loans cannot go over a certain dollar amount. They have a certain limit that they can only reach. Fortunately, that limit does tend to change year over year. But anything over that conforming loan limit is what's called a jumbo loan. And jumbo loans just means that it's more than the conforming loan limit. However, the interest rates for a jumbo loan does tend to be a little bit higher than conforming loans. And VA loans, well, they follow the same conforming loan limits. And here in the Inland Empire, the VA conforming loan limit, it is $548,250. Anything over that is what's called a VA jumbo loan. Now, regardless of whether you're purchasing your home with a conventional loan or an FHA loan, if you're putting less than 20% down for the purchase of your home loan's going to have PMI. The PMI payment, it's based on a percentage of the loan amount, and the average PMI payment, at least here in the Inland Empire anyway, but the average PMI payment, it's usually maybe $250 a month to maybe even $450 a month. And again, that's in addition to, on top of your regular monthly payment for your home loan. Of course, those are just averages. It could be a little different depending on the loan amount. VA loans, they don't have PMI.
Don't get too excited.
He is right in saying that because yes, VA loans, they don't have PMI, but they do have what's called a funding fee. And that's going to be, it's 2.3% of the loan amount, and that's all due up front. So if you were buying a home with a $500,000 VA loan, well, multiplied by the funding fee rate, well, you're looking at $11,500 would be due. However, before you start checking out and saying, all right, well, forget that, that's not going to work, understand there are options. Most lenders are going to have options for you when it comes to that funding fee. Meaning this, if you had in that example $11,500, well, if you had that and you're ready to do it, you can write the check and go ahead and pay your funding fee right up front when you get the loan. Or if you don't have it, or you're saying, that's all the money we have, so we don't want to spend that, well then, in that case, you could actually, again, for most lenders, you could actually wrap that into the loan, meaning it becomes part of the loan and you're paying it off that way, and it still truly is a no down payment loan. Or you kind of split it up, pay part of it and take the other, the rest of it and put that into the loan. Again, the point with all that is there are options available for you. And one other thing though, when it comes to the funding fee, if this is not the first time you've had a VA loan, meaning you've had a VA loan before, the funding fee for you, it's actually going to be a little higher. It's going to end up being 3.6%. But in most cases, if you put at least 5% down on your VA loan, yeah, the funding fee usually can be reduced. VA loans, they do have a few things that they can't be used for to purchase, but honestly, for the most part, most homes are going to be eligible to purchase with a VA home loan. I mean, you could buy a regular single-family home, or you could buy a condo or a townhouse, as long as the complex is VA approved. You could also use it to buy a manufactured home, but that does need to meet the VA's, some of their standards, one being the fact that it does have to be on a permanent foundation. And you could also use it to buy a multifamily home, meaning a duplex, triplex, or fourplex. But with that, you do need to live in one of the units. Now, if you're looking to buy land, I mean, you can. It's just as long as you're looking to buy the land and put a home on the land, then in that case, you should be able to use the VA loan, because unfortunately, you cannot buy just an empty lot of land with a VA home loan. With all that said though, if you do have any questions about VA home loans, or maybe you're thinking about buying or even selling a home here in the Inland Empire, my contact information is below. Give me a call or text. I'm always here to help.